How I make 10% a month with just one trading strategy. I'm going to explain what the strategy is, why most people fail at it, and exact technical details to increase your win rate with the strategy. I'm Krusheke. I've traded crypto full-time for 8 years now, and I've mentored 110 verifiably profitable traders. And my mission is to have mentored 1,000, so I've got 890 left to go. This is not another theory video that teaches you how to draw lines on a chart. It's zero complexity trading. And what that means is actionable, proven information, stuff that's not only worked for me over the years, but 110 traders who I've trained. So what is the buy high, sell high strategy or momentum trading? This is actually a strategy I've used for years. And if you've been in my Telegram, you'll have seen me take a lot of trades with this style of trading. So this was recently a suite that I shared on my Telegram where we went for about 26% profit from my entry. And you can see the total move is actually 81%. But the way buy high, sell high works is you don't need to catch the bottom, because trying to catch the bottom here, you could have come in here at 2.9, you could have come in here at 2.1 or here at 1.6. You could have easily missed those and taken big losses along the way. Now, the way you take a momentum trade is you need a set of rules that tell you when to enter this trade. And you can add a ton of variables to it. Today, I'm going to give you one of the most powerful variables I've seen traders use to get a high win rate with this strategy. But if you look, points 2 and 4 are the most important ones you need to get started with this. Number 2, you need some sort of consistent method of identifying key resistances. I don't want to go into technical analysis today. I've made loads of videos on support and resistance. You can go check those out, but identify a key resistance. Then you just need, number 4, a trigger. Anything to tell you it's time to enter the trade. If you want to make it really simple, just pick a candle close. The second you get a candle close above your key resistance, that's your entry rule. If you want to get it a little bit more complicated, I like using moving averages. So when the 7 moving average crosses your level, that's when you enter the trade. And that's the starting point. That's all you need to start momentum trading. Is that going to be profitable? Absolutely not. But that's the whole point of trading. We add rules, conditions to improve our setups and make more money with them. Now, a lot of you who've been studying technical analysis for a while will be thinking, why on earth is this guy telling me to buy at resistance? Resistance is where we sell. Well, this is just common misconceptions spread by influencers who don't actually trade. Technical analysis is useless by itself. Technical analysis just lets you form your trading strategy. There's absolutely no set rules, no conditions where you have to buy and sell. Anything works as long as you're able to carve out an edge in the market for yourself. So a few advantages of buy high, sell higher, and why you should consider this sort of trading methodology. Firstly, you don't need to guess what price does next. It's reactive, not predictive. You just wait for price to come to you. Then it takes advantage of strong trends. It dominates trending environments, and we all know crypto is legendary for having extremely strong bull markets where there's a lot of money to be made. It also allows you to have a better lifestyle. If you use a smart multi-tier alert system, you can just set alerts and walk away the entire day. If the alerts go off, you trade. If they don't go off, you get the day off. You get to do whatever you want. You can focus on your trading strategy. You can focus on other areas of your life. That's the sort of freedom that comes with trading. Now, if you want a video on alert systems and stuff like that, just let me know in the comments below. I've got a lot of advanced videos planned for you guys. So now, from my explanation, this might look easy. Okay, so I just buy resistance and I make money. Well, not quite. If most of you try to do exactly what I showed you right now, you're not going to make any money. You'll likely lose a lot. I don't say this to be mean. It's just to reinforce one of my favorite sayings. Trading is simple, but it's not easy. You can't miss any steps, and you need to pay attention to the nuance. The number one reason people fail at momentum trading is they do not identify the correct environment for their momentum trades. Momentum trading thrives when there's urgency, when traders are chasing the move. Without that fuel, price action stalls, traps, and quickly reverses. Volume is your clearest signal of whether there's real interest behind a move. Let's take a look at example 1 over here. Remember this: no shift equals no signal. This sort of volume is a dead zone for momentum. Price might drift, but without new participants stepping in, there's no real force behind any move. These are trades that look like they're about to go, but then fizzle right out. You're often left back holding on a position that's never going to take off. Momentum trades rely on fresh capital entering the market. Flat volume tells you no one cares, and you're probably early, wrong, or both. Let's take a look at an example. This is from one of my students. And now you'll notice different chart styles come up because these are all real trades from my students, what they've taken that's good, bad. I'm going to share everything. You see other comments on these. This is because I teach my students to annotate their charts with as much information as possible. But what we're going to focus on right now is this decrease in volume. This student tried to enter a momentum trade to the downside over here. And there were many signs that made this a good momentum trade. For example, we saw slow, grindy action coming down to the level. That's something we like to see. We've got a lot of white space over here. However, if you take a look at the volume, look at what the volume was like earlier in the day. So between 1:30 and 5, really high volume. Then huge decrease in average volume. In fact, we had this flat dead period here. Slight increases, but relatively to the rest of the time period, it's very, very bad volume. They entered a momentum trade to the downside. It didn't work out. These are bad volume conditions. Choppy, sideways, and relatively really low to the previous price action. Choppy or flat volume is the absolute worst for momentum trading. Now, let's look at 2x volume increases. This is better. If you take a look here, you can see a steady increase in volume. It signals growing interest. It's not full-on perfect breakout scenarios. We'll look at those later. But this may set up a moderate trend. You might hit your target, but you're less likely to get explosive follow-through. Those trades that feel effortless. These are mid-tier, in fact, minimum conditions that we want before entering momentum trades. The chances are somewhat in our favor, but we take regular trades. We don't up our risk. We don't extend our profit targets. We don't ramp our risk up like crazy. We just take regular trades here. You can take a look at this trade here going to the downside. This trade shows a sustained increase in volume. Take a look that previously, volume was really, really low, and then suddenly we're starting to get average volume rising. And over time, look at this moving average, it's going up. This sort of steady increase is great for a trade. Notice how price hits the profit target. However, the second it hits it, it starts chopping sideways. Now, luckily, we had it hit this time, but what if it got just below, started chopping sideways and reversed? Not ideal conditions for our trade, but still very solid. So that's example 2. Now we're going to go to example 3. True breakout conditions. Look here at a 40x increase in volume. This is holy grail momentum territory. On days like this, momentum traders can make their entire weeks of returns. A strong and sustained increase in volume usually reflects real-time interest, institutional buying, or herd behavior. All of these drive strong one-directional moves. When you get in, before this happens or just as it's happening, the trade is going to feel effortless. It's like printing money. Now, I live for these. I remember the first time this ever happened to me was with Matic in the 2018 to 2021 bear market. And I was momentum trading. I was doing really well with it. But Matic just went crazy. We just kept seeing conditions like this where volume surged non-stop, and I made more money with Matic in 1 month than I had the entire year momentum trading because it just kept giving me the same trade again and again and again and again. And I knew this was my perfect trade. So all I had to do was take it without getting bored. Funnily enough, I actually left a lot of money on the table because I ended up getting bored of taking the same trade again and again. So I tried to be clever. I tried to do stuff differently and cut into some of my profits at the end. But those are the lessons we learn as we get experience. When trading gets boring, it's actually one of the best times to keep trading, keep doing exactly the same thing and not change anything. Boring trading is good trading. So now we're going to take a look at a few of these examples. So example 1, this is a perfect A+ trade. Really low volume here, and then steady increases over time, huge increases in volume over here. We had lows of about 2 million, and here we're up to 10 mil. This trade, take a look, you enter it and it just goes straight to target without skipping a beat and even goes above the target. What happens is, as you get more and more trades like this, you learn that, oh, I can actually risk more on these trades, or I can extend my profit target and make more money on these trades. That's the importance of being able to identify the best conditions to enter, because you know when to risk more, you know when you're going to make more money. So we can take a look at another perfect trade over here. Look, volume tiny, minuscule volume. And then suddenly interest starts perking up. In fact, you could have started entering momentum trades right here, and then volume starts to explode. When you see this steady uptrend, huge explosion, that is the perfect time to enter a trade. What happened is, one of my students here, he spotted this steady increase in volume. He entered the trade, and the second he entered it, we got huge spikes in volume. So price flew to its target. What you could actually do in trades like this is, while you're managing the trade, if you see those huge spikes in volume, you'll notice that your target gets hit very quickly, and often it goes past your target. Once that happens a few times, the next time, as it's happening, you can extend your profit target. You set up really clever trade management rules to dominate with this. And we'll take a look at one more example over here, and you can see a steady increase in huge increase in volume, actually. So we had really low volume for most of the day, spikes, interest gaining, and now steady rise. We enter the trade over here where we get huge push up in volume and go straight to our target. Not as ideal as the other two setups you've seen, but still really high quality trade. You'll also notice here a sign that we don't really want to see, and that's volume immediately dropping the second we enter our trade and not coming back up. All of these are things we learn as we analyze it, as we learn to use it better and better. So what is the key takeaway from all of this? Use volume as a filter. If volume is steadily going up, that's good. If volume is going down, stagnant or choppy, that is bad for momentum trading. From this video, I want you guys to start building yourself a checklist. Don't try to do everything at once. I just want you to have a set of rules for entering momentum trades, and I want you to start using volume as a key filter for identifying good and bad trades. Over time, you're going to end up with something like this, where you have a multitude of factors that you look at, you mark them like a checklist before every single trade. You know what your best trades are going to be, you know what your worst trades are going to be, and this is how you build consistent, repeatable systems that will be able to make you money forever in any conditions, bull or bear. I hope you enjoyed this video.